Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shel Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's turned worse from the morning. 350 points of a decline right now on the Nifty. We've not just broken 24,400. We are now also below 24,350. We're now at the lowest point of the day, 1.4% of a loss on the Nifty, and most of the sectors have also come under pressure. Barring the realty sector, rest all of the sectors have slipped into the red. Sharp losses being seen on the PSU banks, 1.9% of a loss for this one. Infra is down 1.8%, metals are dragging 1.7%, oil and gas, the Nifty bank itself is down by 1.5%, and all the three constituents are now down. Private banks down 1.5%, financial services down 1.8%. Apart from this, even autos, consumer durables, IT, pharma, and even the broader markets have given into the pressure. On the Nifty, only two stocks are holding up into the green from the 50 stocks that are on the Nifty 50, ITC and Cipla. So defensives really something where investors are focused on. The third gainer now, HUL. So it's completely FMCG and pharma driven at this point in time. But the rest of the pockets, even the PSU space has now slipped about 1.5% lower in trade. So let's welcome Shell also on board. Shell, good afternoon. Not looking good right now.
Well, Sakshi, again, this is relative whether it's looking good or not. But all I can say is that as we were pointing out since the morning, this is a risk of trade that is happening, and people are very keen to protect their profit. Look at India VIX, 4.8% higher today, 14.7. There is this fairly sharp move on the downside that is coming. And it's not only us that are bleeding. Look at the South Korean market. It is also down 1.2%, the Kospi. Look at how profit booking is happening in European futures. Look at how Shanghai and Hong Kong have closed, down about 0.5%. But since we are continuing and closer to the trade, that's why you see this risk of trade that I was talking about. So the US Federal Reserve Board meeting begins today in US time and ends tomorrow. So while all of us know that another 0.25 basis cut is in the offing, but what is not known is the hawkish or the normal commentary that the US Fed chair will give. And it's always better to be safe than sorry, and that's the reason why you see a lot of profit booking happening, at least in Indian markets. Even US futures are at this point of time trading in negative territory. Dow Jones minus 122, US 500, which is the S&P 500, and the Nasdaq, all of them are down. So I wouldn't be a little worried, but it's just that, you know, a 300 point cut on the Nifty, 830 point cut on the Nifty bank looks a bit worrisome, 1.5%. There is the IT index that is also bleeding. So, you know, unless you move profit to the bank, it's just paper profit. We track 19 indices for you, 18 are in the red. Only the Nifty Realty Index, and that too very minorly, is in the green. In fact, now that is also turned red. No, it's green. So that's how it is. Advanced decline robustly in favor of bears, 1703, 1700 shares in the red, 685 shares in the green. My understanding is this, Sakshi, that the low that was made on Friday, that will be tested. And let's look at what that low was. Friday's low was 24,180. We are still at 24,315, but we have one more day to go tomorrow. So probably that is what is happening. But for those who are interested in trades on the long side, very, very interesting statistics in the market today. Look at a lot of counters that are making supernormal gains, and I only focus on these Fairchem Organics, up 20% yesterday, up 20% today. We have Indian Card Clothing. This is another textile company, up 20%. You have the likes of Akshara Chemicals, up 12%. Donier, it was up 20 yesterday, it's up 11 today. NPST, 9.8% higher. Vimta Labs, So many of these counters are giving fairly decent returns on very strong volumes. But yes, I accept that there is a lot of profit booking. But for those who feel very happy about defense, look at Mazagon Dock, look at Garden Reach, look at Cochin Shipyard. All of them are showing strong traction. Look at Zentech, 5% higher at 2450. So that is how the market is at this point of time. Sakshi.
Absolutely. It was Kranti Batini also who mentioned that defense is where one should continue to focus on, and all these stocks are buzzing in a weak setup. You actually see across the board that the rally is being seen on the defense space, be it Mazagon, GRSC, DCX Systems, Zentech, all of them are actually buzzing in trade. In a weak setup, this is where investors are actually turning to in hopes that the upcoming budget could again fuel some kind of spark back into the defense space stocks. What else is buzzing? Well, I will tell you, the auto ancillary space, that's buzzing in trade today. Look at Precall, that's up 6.6%. Tirupati and Kalyani Forge, both up 5%. You have Setco Automotive, up 5%. Igarashi Motors, 4% higher. Craftsman Automation, that's also 2.5% up. That's also buzzing sharply in trade as well. So that's as far as the move coming in on the auto ancillary space is. Apart from the auto and the defense space, where else are you finding traction? Tourism and hospitality, and QSR chains also. Varun Beverages was up in the morning. You have the sister company, Devyani International, that's also buzzing, 4% higher now in trade. Then you have Westlife Food, that's also up by 2%. Yesterday also it was up. Then you have hotel stocks like Chalet Hotels, that's up 3%. You have Lemon Tree, that's also buzzing in trade. Mahindra Holidays, that's up in trade. Oriental Hotels, all of them are actually buzzing in hopes of year-end travels that are picking up pace too, as well as yesterday we did get some data with improvement in passenger traffic for GMR as well. That's some other data that was fueling in. Apart from this, what else is buzzing? Let's look at some of those erstwhile favorites that we have often talked about from the NBFC space. Even though the index is down, look at Edelweiss Financial Services. It's 6.5% higher in trade, a strong surge. So the broking stocks are also buzzing yet again. Jyoti and even 361 WAM, some gains are actually coming in on them. Then you have 5-star Business Finance, Mass Financial Services, all of them also buzzing. Sundaram also is buzzing in trade. These are the key stocks that are also showing us some traction in trade today. So, you know, these are some of the pockets that are kind of define the kind of move that we are seeing on the index level. We will now be waiting for Ajit Nyak, the Senior Technical and Derivatives Analyst at HDFC Securities, to join in shortly to share with us what he believes is the key reason for the fall today and what's the outlook on this one. And let's also look at what the F&O space is also looking like at this point in time. India Mart Intermesh, that's buzzing, 3.5% higher. Oberoi Realty again from the real estate space, 3% higher. United Spirits is also buzzing today in the F&O space, 3% up. JK Cement is another one that's been up and about in the F&O space as of now. So those are the key pockets that are buzzing in the F&O space. Shell.
241, ladies and gentlemen. Some of these stocks are coming out of long term sell orders. Look at Devyani International, 173.10, 4.7% higher. Why am I pointing this out to you? Because the most recent high of Devyani International some 1 year ago was 220. So that selling seems to be over, because after a very nice consolidation period, Devyani International is showing signs of activity, and for the last 4 plus 5, 9 months, it has been in this range of 170 to 160. So this is a stock that needs to be looked at, because food business for the moment is one of the priorities that the markets are reacting to, and over a period of time Devyani International has also made a lot of money for its shareholders. Remember, it's the sister concern of Varun Beverages. So keep this chart in front of you as far as long-term creation of value is concerned. Look at Walchand Nagar Industries. Very few people track this counter, but again 7.6% higher again around its 100-day moving average. And what's really interesting is that it's above yesterday's volume. Delivery volume is far better, and today's volume of about what is the quantity that is traded? This is almost 30 lakh shares, is 5 times the daily average. So a breakout here as well, and of course this is a defense counter. This is something to be looked at. Let's get Ajit into the conversation. Ajit Nyak, Senior Technical and Derivatives Analyst at HDFC Securities. Namaste Ajit ji, a very warm welcome. Tuesday is not turning out to be as it was expected. Do you see more pain for Nifty?
If you look at the Nifty, from 27th September, we are almost in a consecutive downtrend. This was, I feel, it was just a pullback rally, but many usually get confused because of the cyclical convergence in the market. Because if we see the medium term, we are in a downtrend, and there was a short term pullback. So in any kind of a bull market, the rally is very short-lived, and that is what we are witnessing now. But the important juncture to watch for is 24,000 level. If we close below that, then we'll get some more confirmation of the medium term coming back into picture. So it is very important to watch for next 200, 300 odd points, because if we look at the market, the entire market except reality is in deep red. So may it be IT sector or PSU banks or banking sector or any financial sector, metal sector. This usually happens when after a pullback rally. That is what historical data says. So it is very important to now look for 24,000 level mark to check whether we are again resuming our medium-term downtrend or not.
Ajit, warm welcome. Good afternoon to you. Could you point out to us maybe 2 or 3 reasons that you believe that we are seeing this breakdown in trade today? And you know, we only had Monday, which was range bound. Before this, Friday was a roller coaster ride. Again, after a days of consolidation, we are seeing some key levels being broken today. Any key reasons for this?
Ma'am, I don't see any reason, because whenever in a bearish kind of a market, we don't need any reason to fall actually. We saw that we consolidate for 3-4 days and we had a spike down. It absorbed all the liquidity. It went up. We had a spike up. So double side sweep, we called it as a double side sweep, which we saw in the market. So it is very important for us to close above now 24,650 odd mark. Because if we look the previous expiry also, there was more than 10 lakh contracts which expired at that mark. Means the call raters are now little confident about that resistance zone. And if you look at the put, they are just unwinding, the unwinding nature of the put is increasing. So means that the put writers are not that confident in the market. When such scenario happens, we have to take a clue from that kind of a phenomena, and we have to make a gauge the market that it is not going to pass the 24,650 very soon.
Okay. Any key stocks then, Ajit, that you would like to highlight in either the long side or the short side in trade today? Where are you keeping your focus today?
To investors, those who want to be in a long side, reality is the good sector. There are 3-4 stocks such as Lodha and Oberoi and especially Prestige, which is coming out of a triangular kind of a pattern. So there is a probability that after a pullback in a deep after a correction also, if there is a pullback in those sectors, that this sector will keep on making the new highs. So reality is one of the sector where we can keep a buy side focus. Other than that, I'm little skeptical to take a buy call in any other sectors.
Okay, fine. Let's look at some volume buzzers in the F&O space. Futures of United Spirits are trading with robust gains, 2.9% higher, 1563. Remember, this is in the cash, 3.5 times the daily traded average. almost 20.6 lakh shares are traded. PVR Inox, I've been talking about it since morning, although it's come off highs, but very strong volumes, 2.7 times 5-day average, 18.4 lakh shares traded. Coromandel International, Chambal Fertilizers, mild profit booking, nevertheless good strong volume. Oberoi Realty, this is the king of the pack, 20.3 lakh shares traded, record high for you in the counter, and of course it checks all the boxes. A micro market in the form of Mumbai real estate, and of course this theme of a rate cut in the US might be replicated in India, and therefore borrowing costs and loans will be cheaper, although the kind of flats that Oberoi Realty sells, it's not meant for normal people who take loan. They make very, very high end products. And of course one stock that I have said since morning will do well, National Aluminium, 2.7% higher, about 1.96 crore shares have been traded. Your view on the charts of National Aluminium, sir, when you look at the prices, Ajit, what do you see as far as NALCO is concerned?
The metal sector, if we understand the metal sector from 2 weeks perspective, they were good gain. They were good gainers. They were contributing continuously to the index. Even Vedanta, So it comes under the metal sector. So when we look from that sector point of view, it is very good. Even Vedanta participated very well. If you look at the chart on the weekly time frame, on the monthly time frame, and on the daily time frame, it is quite well. But the other peers in these sectors are not contributing that much. So to take a bet on the sector, especially only one stock to choose from a sector which is not been performing so well for a couple of period, which has been a performer with the market, means when market tanks it also slides, and when market goes up it also supports. So in such scenario, to take a long bet on this particular one stock of the deep red sector is little skeptical, I feel. So we must just, if anyone is holding, we must put a weekly low as a stop loss and just hold it for a while. If it needs to do well, it will do on its own. Otherwise, we have to be very cautious on it.
Okay, cautious on the metals pack. How about the two emerging favorites yet again? Defense and railways ahead of budget. Are you looking at these two spaces favorably? Even in a declining market today, a lot of these defense stocks are actually shooting through the roof. 5, 7, 8%, 9% uptick being seen on many of them. Stocks like DCX Systems, Mazagon, even GRSE. So they're making substantial moves despite 25% recovery in the last 1 month for most of them after the consolidation played out. These stocks are actually doing well. Do you think these should be again kept into the radar?
Yes, ma'am, because if we see that these stocks after a good rally, they have been correct, they have given a healthy correction. So after a healthy correction, they have technically they have become a little lucrative, but not fundamentally. Some of them are very highly valued. So I'll speak from a technical point of view. They are come to a very attractive moving averages of 50 and 20 moving averages, gone below 20 averages on daily time frame. And after that, they have consolidated, and now again they are inching higher. So yes, some of the good defense stock like BEL, HL, that we can think of going long in those stocks. But entire sector will do or not, that is a big question. That is a very speculative thing to talk about. So we'll not talk about the entire defense space, but some of the stocks, yes, they are looking good on chart. So after a good formation, after a confirmation, we can go long.
What we'll do, ladies and gentlemen, is we'll take a detour into the market. It's already 2:51. That's 9 plus 30. 39 minutes of trade left, and it's just not looking good at all. Look at how the top traded list is today. There's a company called EIEL. This is a recently listed company that I checked. It's called Enviro Infra Engineers. and when you look at the volume, that's very, very substantial today. 3014 crores worth of stock has changed hands. And let me just give you the recent listing. This was on, the listing was on 5th of December, and the count has rallied for the third day in a row. So one has to be very, very careful on this one. On a day when the market is doing cartwheels in negativity, you have a newly listed stock, recently listed stock, that is up 12.5%. So due care needs to be given. Market capitalization is 6,180 crores. Revenue is 728 crores. And this is all trailing 12 months. 106 crore rupees worth of profit after tax. We'll analyze this one, but this is the top traded, followed by Mazagon Dock. Now 2,348 crores worth of shares transacted. Stock is up 5%. It had breached 5,300. Mindspace, this is the REIT in which Abu Dhabi Investment Authority has sold a substantial chunk. So 2,051 crores worth of transactions. Swiggy, 2,086 crores. Zomato, 1,851 crores, and so on and so forth. Then comes Reliance. The first blue chip that you see on the top traded is at the fifth space, 1.9% lower, followed by Paytm and HDFC Bank. So pure, how should I say, cash counters are dominating this trade of the NSE market. That's how it is, ladies and gentlemen. Let's get Ajit into the conversation on Mazagon Dock. What are the charts telling you, Ajit? What chances that you will see more strength coming into Mazagon Dock from current levels?
Yeah, so the Mazagon Dock has a wonderful bullish chart. If we look at the chart, it has formed a nice base from, if we say the base has started from September, October, and then given a breakout at 4,750 odd mark, then having a good pullback around 4,750. Now again inching higher towards its previous high. So if we look at the chart from all higher time frame to the lower time frame, the chart is doing wonderfully good, and it has high chances that it may again retest its previous high of 5,750 and also go beyond it and test 6,200, 6,800 mark, 6,200 to 6,400 mark. Even volumes, whenever the stock is in a correction mode, the volume dries up, and when the stock inch higher, it comes again to back in its action. There is a huge volume. So this shows the quality of the stock. This shows that technically the chart is well placed. So yes, it is a good stock to go long. But with the risk reward ratio, it is good for the medium term, not for a trader. So 4750 to 4760 is a sweet spot zone where we need to see. It shouldn't go below it. If it doesn't, then there is high probability that it will retest its resistance of 6,200 odd mark.
Okay, so that's as far as the defense space is concerned. Mazagon Dock for you, 4.9% could retest the previous record and further move up to 6,000 levels is what Ajit is mentioning right there. We'll keep an eye out on this stock. It's already recovered 25% from the lows over the last 1 month, and therefore now you see sustained momentum on this one right ahead of the budget. We've been talking about defense and railways. How are you really looking at the fertilizer space, which has started to move up today? Do you think this space will also garner further strength up until the budget? Any favorite stock that you can mention here?
RCF is one of the stock and NFL, but we'll talk about RCF first. If you look at the chart of daily chart of RCF, we have a double bottom pattern. First bottom was formed around on 25th October, then at around November. So both the pattern at the base level, they had made a good hammer and a bullish engulfing kind of a pattern. And after that, it gave a breakout from the neckline of 173. If we look from a last couple of weeks, it was a very sluggish sideways kind of a pattern, retesting its neckline to 173, and today again reclining with good volumes. So this suggests that there is high probability this double bottom kind of a pattern will gain its target, which comes to around 210 to 218 odd mark. So technically, on daily, weekly, monthly time frame, it is well placed after a good amount of correction, which began from 240 level, then making a good reversal kind of a pattern near 147 and retesting its neckline and now again resuming its uptrend. If you also look at the ADX, which is a good indicator which tells deeply about the trend strength, it is also about 20 marks. So, considering all those factors, RCF is one of the good bet from the fertilizer space. So there is high probability that it will test its recent resistance of 210 odd level.
Okay, got that. 2:58 p.m. We'll see what else is buzzing. What's your sense on Edelweiss Financial Services? Why do you think this one has been continuously outperforming? Does it continue to have the strength to move up further from here? Ajit, if you could look at the charts, right now it's at 137.3 odd levels, but this stock has been continuously outperforming.
Yes, this stock as of now risk reward is little unfavorable for trader. But yes, again for medium term players which can keep a stop loss to around 120 odd level, which comes to around 8 to 10% kind of a drawdown. They can see if they invest right now. For them, it makes a sense. Otherwise, it is near to its previous supply zone of 140 odd level. So better to wait for some pullback. Chartically, it is well placed on all the time frames. Nothing wrong in this chart as of now. The only worry is if it goes below 120 and sustains, then there could be a deep correction in this chart. Otherwise, everything is looking good on this chart.
Okay, got that. So Edelweiss is looking positive on the charts right there. We'll continue to focus on some other pockets right there. Let's look at the broader markets to see if there are some interesting names which are buzzing. Vimta Labs is actually up and about 7% odd. You have Jyoti CNC Automation. That's also up by 8.5% today at 1403 odd levels. Strong momentum on this one after a long haul. Questcorp was mentioned by Shell in the morning, 8.5% higher. DCX Systems again a defense move that's been buzzing on the stock. Apart from this, it's Khaitan Chemicals and Fertilizers, almost 9% higher in trade. Then you have Elgi Rubber, that's nearly up 10%. Strong momentum can be seen on this one. Apart from this, we also have stocks like Gala Precision Engineering. This one has moved up strongly, 10.7% higher. Then you also have stocks like Dornier, which were marked in the morning, 12.5% higher for sure. You also have RPP Infra projects, a very substantial move that's come in on this one, 17% higher for RPP Infra. 248. Let's look at this one also, Ajit. Would you be able to comment on RPP Infra? Very strong momentum on this one that's got generated, 248 odd levels right now. And the stock has actually outperformed in trade today. Huge volumes also being seen. 36 rupees of an uptick in just an intraday position. Your sense on this one?
Uh, So this stock has also given breakout of 240 level with volume. So now, if you look at the daily chart, so the chart has gone up. So again, very difficult to say that to enter here because we need definitely a pullback. The pullback to around 234 or a sideway pattern, like a flag kind of a pattern we can expect after such a good rally, because this can be a pole and after a 2 to 3 days of a correction, a decent strong if it gives a consolidation. So that is very more important because we always look for a volatility contraction after a huge volatility breakout. So today it has given a volatility breakout. We'll look for a contraction kind of a thing in this especially RPP Infra. If that happens, then 234 is our sweet spot zone when we consider it as a good support. If it does not go below it, then one can think of going long. And if the true targets come to around let's say 350 odd level, because the chart has broken out from a huge deep cup pattern which began from strong enough, then we can expect a pullback volume wise, it has given confirmation. But yes, entry, it is a little riskier entry at this level, because the true breakout came around 235 level, which was a good entry risk to reward kind of a thing. Now it has gone up, so we'll wait for some consolidation. If it doesn't go below 234, then yes, we can look for 350 also in this specific chart.
Right, ladies and gentlemen, the last half an hour of trade begins as far as Tuesday is concerned, and it is not looking good. But what we will do is we will welcome our very dear friend Mr. Amar Singh, Senior Vice President for Research at Angel One, and try and pick his brains as to why the market is falling so sharply. Namaste, Amarji. Any reason for a 330 point downtick on the Nifty and 800 point fall on the Nifty Bank?
Yeah, I would say that, see, markets, we've seen some sharp correction happening in the market, in the heavyweight. So, for example, if we look at Reliance to start with. So, Reliance has witnessed a sharp correction. And also, if you look at it from a longer term perspective on the charts, on the weekly charts or the monthly charts, isn't really very promising to say. So on the downside, it would have good support coming around the 1200, 1220 zone. So it's approaching that level. That's going to be very important to watch out for, because if that is taken out, then we could witness some further sharp selling there. And the other is HDFC, because these two together constitute almost 20% weightage in the Nifty. And so HDFC has also given up its recent gains, and we've seen some correction happening there as well. So I would say profit booking happening there. And earlier, the way the banks had rallied, we saw that ahead of the RBI CRR cut, we did witness some pullback in banks and some upside movement. So we've seen some profit booking coming there as well. So I would say that markets are witnessing some sort of correction. But yes, despite that, some sectors like, for example, textiles, to a certain extent, to a great extent, IT, and to a certain extent, some metal stocks are still performing quite well. So I would say it's more of a stock-specific market rather than being very focused on the index, because trading the index at the current levels isn't easy, because we are seeing a lot of volatility on either sides.
Amarji, good to have you with us. Good afternoon. Well, tell us, do you fear this could break down into a deeper correction, or could this be just an extended volatility that we are seeing in the markets?
So see, if we look at the markets, what we are seeing is that definitely there is some cause of concern given the fundamental triggers, which really aren't very promising as of now. And also some concerns going forward as to how the US president, new US president is going to, what decisions that's going to take, how that would impact the dollar, what impact would have on the FII flows. And also, if the markets continue to witness some sort of further correction, then the mutual fund flows also, how they really pan out. These are few things or few factors which are impacting the markets. And apart from that, yes, corporate earnings slow down and an expected pullback. So these are few triggers which the markets are looking at. Having said that, I would say if I look at the benchmark indices, Nifty, for example, or Sensex for the matter, the recent lows which they had made. So for Nifty, that would be around, the recent low was somewhere around 23,200 and 300 zone. That's a very, very strong support zone. So it means that breaking that wouldn't be that easy. It would require some fresh negative triggers for the market to really witness a steeper correction. However, on the upside, 24,800, 25,000 level, that's going to act as a zone of resistance. Because what's happening, if I look at it from a technical perspective, more from a medium-term perspective, is clearly that the intermediate-term trend has definitely weakened and weakened a lot. So whenever that happens, and we see that the long-term trend still remains upward and intact for the benchmark indices, But when the intermediate term trend becomes quite negative, that clearly displays that markets, even if they pull back, I've said earlier also a few weeks back that if there is a pullback, that's more of a shorting opportunity because higher levels will be sold into and profit booking will happen. And that's what we are witnessing right now. Because till the time we don't see a consolidation, I would say that we could witness a range play. The recent low is very important, very crucial. So 23,000, 23,200, 300 zone, the recent lows, that's going to act as a very strong support. Whereas on the upside, 24,800, 25,000, that's going to be the zone of resistance. And markets will be driven by some of the factors. Also, the US Fed meeting and the statements are also going to play a part.
Okay.
It's a bit difficult to sort of navigate this kind of volatility against the backdrop of a major event which is in the offing. And as Sakshi was pointing out, there are more than a dozen central banks in this week that are taking decisions on interest rates. Everybody is waiting for the US Federal Reserve to kickstart that. But that's how it is, and that's the volatility that we are playing. Look at the India VIX. This at the moment, the index itself is up 4.5%, and that points to extreme volatility. 3.2% today. Yesterday it was up by about 3.2% again. So this is something that is now increasingly looking to create more friction for traders. Remember, Friday was a very, very painful day. Let's get Amar into the conversation. Amarji, on Friday, as an overall strategy on Angel One, how many traders lost their capital, and how did the day pan out for the general trading class at Angel One? If you can just share some details.
What I can tell you is that Friday was definitely one of those days wherein you witness a major correction and then a pullback of, I would say, significant proportions. Because if we look at the benchmark index, Nifty, also from almost 24,200 levels, it made a high of almost 24,800. So that was a 600 point move from the lows of the day to the highs of the day. And prior to that, the correction was also very steep because Nifty had opened around 24,500. And so the fall was almost 300 points. And then there was a sharp pullback of almost 600 points. So it was a very sharp move. I would say that in such markets, I would say traders, be it anywhere, wherever they are trading, whichever firm they are trading with, they will witness a whipsaws, because in such markets, I would say it's always very important and essential to have a proper risk management and money management in place, and you have to be prepared for the worst case scenario. You also have to be prepared for any eventuality that might happen, because no one expected that after a sharp rally on Friday, the way the markets really bounced back, on the next 2 days, it would be a correction of almost roughly around 500 points, 450, 500 points. So the markets are the way they are, and we'll have to be prepared for volatility. And as I said, that whenever the intermediate term trend continues to be very weak and negative, no matter if the long term trend is up, we'll witness choppy trading sessions. And that's what we are witnessing right now. Also, what we are seeing is that on one hand, the PSU banks, on one hand, the HDFC, or the likes of ICICI, or the likes of Kotak Mahindra to a certain extent, and IT, like Infosys, TCS, and HCL Tech, Wipro, Tech Mahindra, moving on the upside, but many stocks are pulling the index down as well. So that's the reason we are seeing this choppiness. And also, if you look at the advance decline ratio, some days we see significant advances outnumbering the declines by maybe 1:2. But again, today we are seeing declines almost not exactly twice, but close to 1.7 times of advances. So that tells me that it's more of I would say, a stock pickers market wherein one needs to be selective in picking. And for index, we definitely need to be careful if you're into futures and options.
Amarji, do you think there are any safe pockets in this current market apart from IT and banks as well? I mean, within the mid and the small cap space also, I want to understand. Are there any safe pockets within the broader markets?
I would say that there are a couple of areas one can definitely look at. FMCG is one of them. It's not being touched by many, but it has witnessed some significant correction across the board for the Britannia, Nestle, Colgate. For example, Tata Consumer. So we've seen Marico, Dabur, to name a few. So all of them have witnessed significant correction, anywhere between 30% correction also and higher. So these are stocks which one can again look at from a medium-term perspective, not very short-term perspective. Maybe from a medium-term perspective, when we see an uptick, because see there are many factors which actually play out. So from medium-term perspective, this is one sector one can definitely look at. Pharma sector is another one which one can keep a close watch on. We've seen some very sharp rally there, but again a pullback in the likes of Piramal Pharma is one stock I've been talking a lot about the last few months. So that's one stock which has rallied significantly. Any pullback in that can be a buying opportunity, maybe from a medium-term to long-term perspective. Apart from that, as you rightly said, IT has been a top performer. Infosys, TCS both are, I would say, looking overall positive. Infosys above 2000 level, sustaining a 2000 level, you could witness anywhere between 5 to 8 to 10% rally there. So that's there. And apart from that, the hospitality sector also one can keep a close watch on, like the likes of Lemon Tree for the matter, but again from a medium-term perspective.
330, ladies and gentlemen, the pain seems to be around 24,350 and 24,300. Let's hope that last 3 sessions volatility is what the market is looking at, but this doesn't look like stopping. Aisha Motors is 4742, down 2%. KPIT Tech down 1.5%. HFCL has slipped 3.7%. Cement plant constructor AIA Engineering is down 1.5%, 3448. Steel Authority, I'm purposely reading names of different stocks and different sectors so that you get a feel of the market. Central Bank of India 1.8% down, 56.95. Exide Industries down 1.75%, 451.5. Canfin Homes slips 2.5%. SBI Card 1.9% lower, and of course Shipping Corporation and IndusInd Bank losing 1.9 and 2.01% respectively. That's how it is, ladies and gentlemen. Mazagon Dock almost now making a fresh intraday high, 53.20, 5.75%. Jyoti CNC, something that Sakshi just marked, up 10%, and that is how it is moving. CSB Bank, this is a bank where a lot of business is done on gold financing. One of the few recent listings that we have been tracking for a very, very long while. Fresh move starts over the last 2 or 3 sessions. Today the counter is up 3.75% at 318.50. So this is how the broad structure of the market is on Tuesday, where heavy selling pressure is being witnessed on the Nifty 24,348, 325 down. Nifty Bank 733 down, and now at 52, 843. Yours, Sakshi.
Shell, I was looking at one stock which you clearly tracked a lot, DOMS Industries. That's at a 52-week high as well. A strong momentum can be seen on this one. 4.5% higher. Even in this weak market. This company is into stationaries, children's stationery right there. Remember, paper stocks is something that we've been tracking for the last few days. Now something which is related to stationery is also moving up. 3,039 for this one. Amarji, have you been tracking this at all? It lied low for a bit after getting
55% for the last 3 years. Profitability has also been good, but the company is highly priced in terms of the stock PE as vis-a-vis compared to its peers. So that's one concern there. Overall, I wouldn't say fresh entry at the current levels. The stock, though the stock is very strong from a long-term perspective, but what we are witnessing on the intermediate-term trend is that there is definitely a loss of momentum, though the uptrend remains intact. So that effectively means is that higher levels for the stocks to sustain at higher levels isn't going to be easy. However, the last I would say 2 weeks to 3 weeks, we've seen some specific days where the volumes have been significantly higher as compared to the average volume. So that clearly tells me that there is some buying interest which is coming in the stock at levels somewhere anywhere around 2800 to 3000 odd levels. So sustaining above the level of 3100 is something which is going to be very important. Today's high is also, I think, 3115, and the high on 18th October was 3038, and recent high in November also was 1096. So clearly 3100, 3150, that's going to act as a zone of resistance for the stock. Wouldn't recommend buying at these levels, but yes, on pullbacks one can look at, but one needs to be slightly cautious in the stock at the current levels.
Okay, got that. In fact, Jyoti CNC is now at a new high altogether, 1457. That's the kind of move that we are seeing, 12.5% higher, very strong surge, now up 12.8%. It's at the day's high, and very strong momentum and volume also being seen. 1451, all-time high for this one, Jyoti CNC. Amarji, have you been tracking this one? This is one of the rarest stocks that we talk about, and it's garnered a lot of traction now.
Yeah, I would say that if you look at the market cap, that's close to 32,000 crores plus. The company's stock P is in excess of 100. Sales are comparatively at around 1600. If you look at the quarterly results, the September quarter results have been far better as compared to the June quarter. And the stock has really taken off significant after a correction, because if we go back in time, so in October, the stock had hit a sub 1000 levels. Currently it's around 1450 or so. Stock has rallied. If we go back slightly more back, so in June of 2024, it had made a high of 1449. So it's breached that level. So it's breached its all-time highs. And that also on significant volumes, as you rightly said. The volumes have been very high today as compared to the average daily volume. So that effectively means is that definitely there's something which is happening in the stock in terms of the buying interest that has come up. So those who are long, they can definitely hold on to their positions, because sustaining above that 1450 levels, the stock has a potential to rally towards the 1550 levels. But a fresh entry at the current level, I wouldn't advise.
Okay, ladies and gentlemen, it's a 7-month breakout that's happened on Jyoti CNC, and this is going to be a record close today. So a fresh sector, a fresh up move on the counter is now afoot. And remember, this is again this is a recent listing on the National Stock Exchange. So with that background in mind, let us analyze it. I just want to see, when was this listed recently? Jyoti CNC Automation in February of 2024. The listing day was a price of 585, and let's look at Jyoti CNC Automation IPO price. That will give you an appreciation. Okay, 331 was the IPO price, and the shares were listed on 16th of January 2024. So from 331, and the listing day high was 558. So that is what the structure is, 1457. That's easily a 4x kind of a move in less than 12 months. But the stock had previously peaked on 20th of June. So you can well imagine that from 16th of January to 20th of June, the stock appreciated 4x, and a fresh move has started today. 1461. We'll keep an eye on this one. These breakouts are very, very necessary to track, because they give you pointers to future multi-baggers. So keep Jyoti CNC in mind. This is not to say there is going to be a multi-bagger, but this is how the structure is for the moment. 322, and we are now just 8 minutes away from close. Let's look at the top gainers in F&O. Okay, United Spirits, National Aluminium, Oberoi Realty, Max Health. We've discussed all of these over different periods of time. Lal Path Lab has changed a digit, 3000, above 3000. So liquor stocks, hospital stocks, and real estate stocks are doing well. We need to find a common thread in all of them. I think it's unaffordability. Hospitals are becoming more and more expensive. Real estate was already out of our pocket, and increasingly liquor that is sold in the market is also very, very expensive. So that is how the structure is, ladies and gentlemen. Let's hope the market shuts at 24,350 or so. It's been a painful day, so to say. Sakshi.
Absolutely. Amarji, I'd also want to ask you about one large cap stock, and Reliance Industries is something that we should discuss. Why? Because I think the stock is all set to give a negative return for 2024. Now this will happen for the first time in the last 10 years for Reliance Industries. How are you really looking at the stock? Do you think it is prepping itself? Consolidation has happened for the good. Maybe 2025 could be a year when Reliance Industries could make substantial profits for investors?
Yeah, I would say, Reliance has been growing significantly in size. So we also have to remember that once you really outgrow in size, then having that growth isn't that easy. And also when you are a major chunk of the Indian economy. So those things play out quite well, and we've seen that the Indian GDP growth rate means at below expectations, below the 6% mark. So clearly, that tells me that that's one of the reasons we have seen some correction, and also we'll have to watch out for what Reliance is able to really deliver over the next couple of quarters. So from that perspective, I would say investors have looked at profit booking in Reliance, and the stock has corrected. Because if you look post the recent highs, which was around 1580, currently it's around 1245. Technically, if you look at the stock has hit multi-month lows with strong support for the stock seen at around the 1200, 1220 zone. That's going to be very important, very crucial, and sacrosanct level to say. Breaching those levels, then we could witness some further sharp correction. If you look at the charts from a long-term perspective or from a intermediate-term perspective, the charts continue to remain a cause of concern. No doubt, despite the sharp correction, still there is cause of concern. So the only level to watch out for is 1200, 1220 on the downside. If that's not reached, then I would say maybe we've seen the worst for Reliance over the last few months. If that is taken out, then we could witness some further sharp selling as well. On the upside, for Reliance to witness any meaningful rally, it needs to sustain above the recent highs of 1320, 1330. That's going to act as a immediate zone of resistance for Reliance.
5 minutes left. Let's hope this pain ends on Tuesday, and that Wednesday is a new beginning. Nothing much, ladies and gentlemen, is going on in trade today, except for the fact that selling pressure is accelerating. One fresh move that has come into a very well-known stock that Sakshi and I have been tracking for a while is Nykaa, 3.7% higher, 174.56. We generally tell you stocks which are low ticket items and very high beta. Therefore, Devyani International and of course Nykaa are moving after a very, very steep correction over many number of months. Jyoti CNC is breaking out after a 7-month hiatus. So these are the stocks that you keep on your radar, at least on the trading part of your screen, and they can do wonders if caught at the right time. Volume breakers, United Spirits is the top volume buster on F&O today. 4.2 times the 5-day average, 24.15 lakh shares have been traded, and it's in green in a rare day. And Sakshi, this is not the only liquor stock in the green. Look at Allied Blenders and Distillers, fresh record high. Look at Radico Khaitan, up 6%, fresh record high. So these are moves that are coming in over time. And I was also checking GM Breweries, that was for 800 or something, that is also showing signs of activity. 860, up 3.2%, although not around record highs. But Radico definitely is doing wonders at this moment. 2464, yes, this is going to be a record closing at least. Let's see this one. And United Spirits, something that is a sector leader, has been a bit of a dampener for long-term shareholders, and is doing fantastically well today. For the stock, Amarji, what would you advise for shareholders? This is highest since 4th of October, and from the looks of it, this is going to hit a record high. Amarji, United Spirits.
If I see, you rightly said that there are a few sectors which are doing quite well, and liquor is definitely one of them. Hospitals again is another one which is been doing quite well from that perspective. So see, overall, if you look at from a macro perspective, from a long-term perspective, these are stocks which will witness a lot of demand and growth in terms of sales. These are sectors which are to a very great extent resilient to the ups and downs of the economy. So this is one stock one can definitely keep a watch on, keep in one's portfolio if one is not averse to holding stocks which are into liquor. So having said that, I would say that the stock has witnessed a decent rally this year itself. Look at the stock is up by almost 40%. United Spirits up by 40% this year, and long-term trend remains strong and positive. Having said that, if I go back and see on the last week of September, the stock had made a high of 1647, and post that the stock had corrected towards 1400, 1420 levels. Now, for the last few days, we've seen some strong traction, and the stock moving above the recent high. So sustaining above the current level 1550, the stock has a potential to rally towards its all-time high, which is 1647, 1650 levels. That's going to be the level where the stock could witness some profit booking. So yeah, this is one stock one can look at from a short-term perspective as well.
Okay, well, we will thank you then, Amar, for being with us on this special edition. The markets have also shut shops. We'll start wrapping up. 348 points of a loss. 24,320 is where the Nifty is ended, with 1.4% of a loss on the major index. The Nifty Bank slips by 1.5% as well in trade today. It shut shop at 52,789 odd levels. When we look at all the sectors have slipped into the red. You know, PSU banks, the top loser, 1.9% lower. Infra, 1.7% lower. Autos, 1.7%. Metals, oil and gas, financial services, all of them dragging in trade. IT, FMCG also slipped. Realty also, by the end of the day, gave up the gains that it had garnered through the morning. About 0.25% lower in trade is where it has shut shop at. Among the top contributors on the Nifty on the lower side, you had heavyweight counters like HDFC Bank that contributed 55 points to the decline on the Nifty. Reliance contributed 38 points, Bharti Airtel about 30 points, ICICI down 29 points contribution coming in on the Nifty, and L&T contributed about 20 points on the downside. Only Cipla managed to stay up into the green today, 1450, 0.1% of gains. 49 stocks slipped into the red. Shriram Finance, top loser, 5% of a cut on this one. Grasim, 3% cut. Bharti Airtel, Hero Motocorp, IndusInd Bank, these were the other top losers on the markets. PSU stocks largely, most of the pockets did lose. Some of the defense space stocks definitely pulled up in trade. On the F&O space, gainers included stocks like India Mart Intermesh, United Spirits, J&K Cement, Oberoi Realty, Nalco, United Spirits, but the ones on the lower side were L&T Finance, Shriram Transport Finance, also RBL Bank, HFCL and Cummins India. These were the top declines as far as the F&O space is concerned. However, on the broader markets, the Nifty 500, Fairchem Organics ended with 20% circuit, Kalyani Steels about 17% circuit. You had RPP Infra about 15% uptick. Then Jyoti CNC, which we've marked, about 11% higher. EMS Limited about 11% higher. Gala Precision 10.5% uptick for this one. Dornier, these were the outperformers in the broader markets right there. But we'll leave you at that, viewers. It will be important to track how some of the macro data comes in on the US and on which the overnight cues will be important to track for tomorrow, and of course what will be the figure of the FII flows this time around on today's trading session as well. We'll continue to get you all of those updates on the markets and even beyond in the business world. Stay tuned with Business Today Television, and up until then, thank you so much for watching Market Today.
Welcome to our special edition of Market Masters, where we get